You are listening to chartingwealth.com for Monday, the 31st of August, 2015. We have a bizarre looking chart. It's been this crazy since we saw the big drop back on the 24th. This is the total market. We are tracking it. There was actually a lot of up and down movement you could see here until this huge knockdown. And when that occurred, it basically tightened up the Bollinger Bands and the charts that we had seen for the last year after this huge drop occurred. Well, what's happening? Well, we've seen some recovery, and this is a two-day chart on the total market. Nowhere near up to where the two-day big drop occurred around the 24th of August, but the market is trying to recover. Now, if we go and we look at the 4-hour chart, you can see that where the drop occurred on the 24th, and again, not taking into consideration what had happened the prior day. Remember, we have a two-day candle that we are looking at on the big chart. There's been a recovery up to somewhere around where that big drop was on the big day, the 24th. But as far as the recovery on the two-day candle, not quite. And that's the reason we use the two-day candle instead of just the one-day candle. Everybody seems to want to look at one-day candles. We don't like that. We like having 2 days, which is basically 4 of these half-day charts or 4-hour charts. And it seems to give us a different perspective and a more accurate one. If everybody's looking at one thing and not looking at others, I like to look at that other thing. So we see a crossover going up on the 27th, where in the afternoon, where the crossover occurred on the 4-hour chart. And it's sort of been holding over the last day and a half. What we've seen happen is it's been right at where the drop occurred on the morning of the 24th. It's really not gone higher than that. So what does that mean? Well, maybe that's all the strength the market has to recover. We shall see. Now, let's go back to our two-day chart. And let's brighten the screen a little bit. And let's take a look at SPY. What do we see on SPY? Well, we again see on the two-day chart, it's a little bit different looking. We see some down movement on the 20th, and then of course the 24th is where we see lots of down movement, followed by down movement on the 26th and some recovery on the 28th. But what do we see there? Well, it's sort of a spinning top, lots of indecision, and it's in the middle of the down candle on the 26th. What does that mean? Well, to us, since all the movement is sort of in the middle of the down candle, not a lot of strength pushing that up. Now, this again is SPY, which is the S&P 500. If we look at the 4-hour chart, what do we see? Well, we see a crossover going up there in the afternoon of the 27th, and again, not even powering up as high as the drop on the morning of the 24th, much less what went on the Friday prior to the drop on that Monday, the 24th. That would have been the 21st. And again, remember, our two-day candle encompasses all the down movement on the 21st and the 24th. So what do we have? Well, we have the market topping out somewhere around about 200. And we see some down movement actually in the afternoon. Now the derivative oscillators continue to heat up, as has the difference, the divergence. We don't see a converging of the MACD and the signal line, so we'll continue to pay attention and watch. But again, maybe that's all the strength the market currently has. We will continue to watch very carefully and see if we have another rollover. Now don't forget, we saw that as a money maker in the Qs last time. We're still in a confirmed down move on the big chart. And if we see our smaller two-day chart, roll back over going down, that is a time to look to hop in and ride that down movement where the smaller chart is paralleling the down movement in the big chart. Ever we see pullbacks and then we resume the move in the direction the big chart's going, look to get into that move. It's typically the safest move you can make in the market. So let's go ahead and back out to the two-day chart, and we'll go to the Qs. And actually, we did make that move in the Qs. I'll show you that in just 1 minute, but let's just look at where the Qs are. The Qs has recovered some, but again, that movement is not even to the top of the big down movement on the candle for the 24th. So we have some recovery, still in a confirmed down move. Now let's look at the 4-hour chart, and I'll show you what I was talking about that happened. If we go back to the 14th, we were in a confirmed down move on the big chart, and the small chart, that is the chart we're looking at, the 4-hour chart, crossed over and started moving up on the MACD. Now you could see the up movement much easier before we had this market crash, but the market moved up. When it crossed over going down around the 19th, around the end of the 19th, beginning of the 20th of August, we said, good place to get into a down move. Well, if you had done that, of course, it was a darn good place to get into a down move around the 20th. The low, if you would have gotten in in the worst spot, was 107.90. And of course, before the big drop, it had actually gone down to a low of 103 or 102.55. And of course, if you had been in and had made any kind of trade there, if you'd been able to sell at the low of 84.74, that would have been an unheard of return. So anyway, and when we say that, for those of you who aren't keen on exactly what I'm talking about when I'm talking about a short position, we're talking about buying something like the QID, which is a double inverse. In other words, when the Qs goes down, this is the beautiful thing about ETFs these days. When the Qs goes down, and you know it's going down, and you have a good feeling it's going down, you can typically find in any index, you can find an inverse ETF. And that inverse ETF makes money. It goes in the opposite direction. I actually happened to personally be in a QID down move when all this occurred. And of course, you can imagine how well that looked for me in my trading portfolio. Now, again, our advice here is not for real trades. We always talk about virtual trades. This is for your training. When you get good enough in doing your virtual trades and make enough good trades, and you feel comfortable, then it's up to you to start making your own decisions. We are not a stock calling service. We're an education company. So where are we on the Qs now? Well, the Qs crossed over, moving up, and we hope that we might see this. And again, it looks like it's topping out. Also, now maybe on Monday there'll be all sorts of good news and the market will get all happy and move up again, but it's topping out right where the big down move occurred on the 24th. So again, if it rolls over and starts to go down and parallels the big down move that we're currently seeing in the Qs, look to jump right in one of your virtual trades on QID. Give that a try. Okay, now let's lastly go out to gold. And what is gold doing? Well, gold been moving up nicely, crossed over back on the 26th, going into the 27th, and of course here's the chart for the 28th. Gold has crossed over the 2-day trend line, still in a confirmed up move on the big chart, but it has lost a lot of steam. Let's look at the small chart and see what it can tell us. On the 4-day chart, we see the crossover there around the 26th into the 27th, and then gold has sort of stabilized. It really hasn't gone below the down move on the 26th, and it looks like it's trying to bounce. Now again, if gold turns over and starts moving up again on the 4-hour chart, confirming the still up move on the big chart, what does that mean? Get in. It means get into gold. And again, get into a virtual trade on gold and see how well you do. Don't you love the charts? Instead of watching the news and listening to all that babble, pay attention to what's going on in the charts and don't get confused. Thanks so much for listening to us. We love to hear from you. Follow us on chartingwealth.com, also our Facebook, Twitter, and Instagram, and sign up for our newsletter. And also get our new training. It's about a 15-minute short course that will help you be able to read these charts so much better. Thanks so much for listening. chartingwealth.com.